The economic crisis might have brought hard times to us all, but it is still possible to climb above the catastrophe and multiply your income. Charlie Munger, billionaire businessman, just shared vital information with investors for surviving this bear market. He also shared his tips on how anyone can turn $10,000 of investment capital into millions. Join us as we discuss Charlie Munger's timeless advice on how to turn thousands of dollars into millions, even in a bear market, and the 5 stocks Munger holds in his tight portfolio. Charlie Munger was not always so affluent. Strangely enough, he was born on the 1st of January 1924 in Omaha, Nebraska, Warren Buffett's town. He abandoned his pursuit of a degree in mathematics to join the U.S. Air Force and later went to Harvard Law School, graduating in 1948. After graduating, Munger moved with his family to Pasadena, California. This was where he eventually founded his own firm in 1962 after working at a real estate firm. It was not all roses and unicorns for Munger. It was quite the opposite, as he had to learn the hard way. His first business was a transformer manufacturing company with his partner, Ed Hoskins, where he almost lost everything. It was through this series of failures that Munger acquired the discipline and more knowledge. So, after a number of years, they managed to obtain a respectable return on the capital investment. In 1961, an old acquaintance of Munger's invited him to partner with him in a real estate development deal, which was completed in 1967. Munger made a 400% profit on the sale of the investment. He stayed in the business for a few more years, and that was how he made his first $1 million. He then founded his own investment company that he operated from 1962 to 1975. This was where he demonstrated his keen investment sense, generating average annual returns of 19%, while the Dow Jones, over the same period, averaged a return of just under 5%. Munger has been the most trusted advisor and friend of Warren Buffett for over 4 decades, and they both believed in value investing. However, Munger's interpretation of value investing differed substantially from Buffett's interpretation, but it was Munger's idea of value investing that has made Berkshire Hathaway such a huge success. In his 1989 letter to shareholders, Buffett credited Munger with being blunt with him on the fact that Berkshire should not pursue the cigar butt version of value investing. Cigar butt investing is a term they use to describe investors who buy a dying business, worth maybe $100 for less, maybe $75 just to get the 25% of what Munger calls the free puff that's left in the business. As Buffett explains it, he began his own career as that kind of cigar butt investor, and it was Munger who understood the foolishness of that approach long before he did. Charlie understood this early. I was a slow learner. It was when Buffett was working with Munger that he finally learned that the bargain price for a troubled business with multiple flaws too often turned out to be a false discount in the end. Any immediate gain would soon be eroded by low returns. Instead, Munger and Buffett would rather buy a great business for $125 when it is currently worth $100, but is definitely going to be worth 15 times its current value in 10 years. That's value investing. Charlie Munger says, the idea of getting more value than you pay for, that's what investment is. If you want to be successful, you have to get more value than you pay for. So it's never going to be obsolete. He adds, some people look for values in strong companies and some look for values in weak companies. As an additional strategy, Munger strongly opposes excessive diversification. That's why he holds a concentrated portfolio of just 5 stocks that he manages at Wesco. Munger defends his tight portfolio, saying, if you know the business, and therefore the risks and potential, over the long term, a concentrated portfolio will yield better returns than a highly diversified portfolio. Charlie Munger also said that if there was one skill he learned, it was playing cards, because that's where you learn to fold in time if the odds are against you and to take advantage of opportunities when they present themselves. That's how he and Warren Buffett built Berkshire Hathaway. Charlie Munger reveals that Berkshire was built on the eternal verities: basic mathematics, basic horse sense, basic fear, and basic diagnosis of human nature. He adds that they stuck to the basics, and with a certain amount of discipline, it has worked out quite well. Charlie Munger adds that he was also willing to go into so many different businesses. I was constantly going right into another fellow's business and doing better than the other fellow did. The reason it was possible? Self-education, developing mental discipline, and big ideas that really work. Munger says, move only when you have an advantage. It's very basic. You have to understand the odds and have the discipline to bet only when the odds are in your favor. He reminds the younger investors of this. Discharge your duties faithfully and well. Step by step, you get ahead, but not necessarily at fast spurts. But you build discipline by preparing for fast spurts. Slug it out 1 inch at a time, day by day. At the end of the day, if you live long enough, most people get what they deserve. Charlie Munger has never really been one to just daydream and do nothing about it. He hammers on the importance of discipline. I believe in the discipline of mastering the best that other people have ever figured out. I don't believe in just sitting down and trying to dream it all up yourself. Nobody is that smart. If you're going to be an investor, you're going to make some investments where you don't have all the experience you need. But if you keep trying to get a little better over time, you'll start to make investments that are virtually certain to have a good outcome. The keys are discipline, hard work, and practice. Munger adds that it's like playing golf. You have to work on it. As an investor, Charlie Munger mentions that you must know the big ideas and the big disciplines and use them routinely. All of them, not just a few. Most people are trained in one model. Economics, for example. You know the saying, to the man with a hammer, the world looks like a nail. This is a dumb way of handling problems. But on GameStop and cryptocurrencies, Charlie Munger is more conservative. Certainly, the great short squeeze in GameStop was wretched excess. Certainly, the Bitcoin thing is wretched excess. I would argue that venture capitalists are throwing too much money too fast. There's considerable wretched excess in venture capital and other forms of private equity. A few weeks ago, Munger commented on the current state of the markets. He said, I think eventually there will be considerable trouble because of the wretched excess. That's the way it usually worked in the past. But when it's going to come and how bad it will be, I can't tell you. Charlie Munger says he strongly favors owning only a few stocks. Here's how he put it. You're lucky if you got 4 good assets. If you're trying to do better than average, you're lucky if you have 4 things to buy. To ask for 20 is really asking for an egg in your beer. So, what are Charlie Munger's 5 favorite value stocks? The first is Wells Fargo & Company. Wells Fargo & Company never fully recovered from the 2009 financial crisis. Their situation was made worse by a loose compliance culture that led to a number of problems that threatened to dump their name in the mud. Like all banks, Wells Fargo struggles with low interest rates and the potential for high credit losses from an economy already weakened by lockdowns. What could be the reason a renowned investor owns this stock? Well, there's been a change in management. Under new CEO Charlie Scharf, the bank is aggressively overhauling its entire operation. It even plans to sell its asset management business. The shares carry considerably more risk than many other banking stocks, so tread carefully. Since 2010, CEO Brian Moynihan has successfully guided the recovery of the Bank of America from the devastating global financial crisis, which nearly ruined it. Today, the bank has a strong and diversified mix of businesses, including traditional banking, wealth management, and capital markets. Credit loss reserves are 1.17% of total loans, while credit losses are running at only 0.23% of loans. Capital is strong, with a weighted capital ratio of 10.5%. The shares trade at 11 times the estimated 2022 earnings. The next is China's Alibaba, currently trading at 2017 prices. Alibaba shares are at a deep discount relative to Western companies. Even though it's considered the Amazon of China, Alibaba's shares trade at 35 times trailing earnings against Amazon, which trades at 128 times trailing earnings. Munger was vocal about the value of building an economic partnership with China. When asked about the investment in Alibaba, here's what he said. Well, we did it for a very, very simple reason. We got more strength per dollar invested in China. The companies we invest in are stronger relative to their competition and priced lower. That's why we're in China. The fourth stock is U.S. Bancorp. U.S. Bancorp focuses on traditional banking and wealth management. Unlike other majors, The company has almost no capital markets operations. The experienced and conservative leadership oversees a high-quality and low-risk business model, including its underappreciated payment services business. U.S. Bancorp has a 9.9% capital ratio that is bolstered by robust reserves at 1.88% of loans. The shares also trade at 11 times the estimated 2022 earnings. POSCO exports 63% of its production as its low cost and high quality make it globally competitive. The company's balance sheet is sturdy, with cash nearly offsetting its total debt. POSCO shares trade 4.7 times the estimated 2022 earnings. Charlie Munger is still on the board of Berkshire Hathaway, and he devotes a lot of his time and resources to philanthropy. Which of the Munger stocks are you buying now?